Okay, let's unpack this. Welcome to the Deep Dive, your shortcut to, well, really getting a handle on things. Today, we're diving deep into the world of digital transformation in insurance, specifically life insurance and annuity software. We've got data here from cognitive market research, and our mission is basically to pull out the key nuggets for you. We want to understand where this market is globally, regionally, and what it actually means. So when we say life insurance and annuity software, what are we really talking about? It's all those digital tools insurers use, right? Managing policies, claims, customer stuff, even like automating underwriting. It's kind of the digital engine room for these products. And the numbers, well, they definitely tell a story. Back in 2021, global sales revenue was over $6.4 billion. Jump forward to 2025, and that's already climbed past $8.2 billion. But the big projection, the one to watch, is for 2033, expected to hit a huge $13.4 billion. That gives us a compound annual growth rate, the CAGR, of nearly 6.3%. That sounds like a pretty solid path.
Yeah, what's fascinating here isn't just, the size of the numbers, it's what they actually signal for the insurance world. That's 6.3% CAGR, roughly. It's not just about software budgets getting bigger. It points to a really fundamental change, a change in how these companies work, how they manage everything from like selling a policy to paying out a claim. It's a move away from the old ways, the paper pushing, towards digital, efficient, and increasingly personalized systems. And for you, the listener, this could mean, well, maybe faster claims, products that feel more tailored, just a smoother online experience with your policies.
Okay, so that global number gives us the overview. But you often find the really interesting stuff when you kind of zoom in, right?
Yeah.
Where does this digital shift look different around the world? Where should we start digging into the regions?
Right. Let's maybe start with North America. It's a major chunk of this market. Their revenue was just under $2.3 billion back in 2021. And the projection, nearly double that, almost $4.5 billion by 2033. That works out to a CAGR of about 5.8%. Pretty solid growth.
And is that mainly the U.S. driving things because it's such a big market?
Right.
Or are Canada and Mexico also seeing, big shifts?
Well, the U.S. definitely dominates in sheer size. Yeah, it's projected to be over $3.5 billion itself by 2033. But interestingly, Canada is actually growing a bit faster. Its EGR is slightly higher, over 6.4%. So that points to maybe a particularly rapid digitization push there. And Mexico is showing steady growth, too, around 6% CAGR. So it's definitely a continent-wide thing, not just the U.S.
Okay, interesting. Let's hop across the Atlantic then. Europe. The numbers there, about $1.56 billion in 2021, expected to reach just over $3 billion by 2033. It's a CAGR of nearly 5.9%. Very similar to North America, actually. Are there specific things shaping that in Europe, maybe regulations or other digital pushes?
Yeah, that's a good point. Europe's growth is often influenced by things like evolving regulations, GDPR, for instance, and there's a big focus on using digital tools to improve the customer experience. You see Germany and the UK showing really strong growth. Both have CAGRs well above 6%, so they're basically set to double their market size in this time frame. France and Italy are also, significant contributors. It is a bit different from Russia, which shows more modest growth, around 4.1% PAGOGR. But overall, you've got countries like Spain, Sweden, Denmark also showing healthy growth rates, mostly in the 5 to 6% range. So it's a broad push.
Right, so Europe's keeping pace, solid, steady digital adoption. But if we're looking for where things are really, taking off,
Yeah.
we probably need to look east, right? Are we talking Asia Pacific?
Yeah.
Because those figures look, well, pretty remarkable.
Absolutely. Asia Pacific has really become the powerhouse region here. It's projected to jump from just over $1.8 billion in 2021
Yeah.
to a huge $4.2 billion by 2033. And get this, the CBGR is over 7%. That's the fastest growth anywhere in the world for the software market.
Wow, over 7%. What's driving that? Why is Asia Pacific such a hotspot for this digital insurance tech?
It seems to be a mix of things. You've got rapid economic growth, a growing middle class, and just really high levels of mobile phone and internet use. That creates a perfect environment, really. China, of course, is a massive market on its own, projected to hit almost $1.3 billion by 2033, with a CAGR over 7.2%. But what's really eye-catching is India. India actually leads the whole region, maybe even the world, with the highest CAGR, almost 7.85%. That's an incredible surge in digital adoption in their insurance sector. Japan's also making really big strides. And then you've got strong growth across South Korea, Australia, Southeast Asia. It's just widespread digitization happening there.
It's a lot of numbers, I know. But
Yeah.
what really strikes me is just how global this shift is. But from your perspective, what's the biggest hurdle for companies trying to do this? Pushing these digital plans across so many different places, different rules, different customer expectations.
That's a really critical point. A huge challenge is balancing like a global system with local needs. What works perfectly in the US might need major changes for regulations in India or, cultural preferences in Brazil. And then there's the whole issue of integrating with old systems. Many insurers still have legacy tech, right? That integration piece is a massive, massive hurdle. So yeah, the growth is impressive, but it definitely comes with big technical and operational headaches for these companies.
Right. Makes sense. Okay, speaking of other markets, let's quickly touch on South America. Projected to more than double, too, from around $328 million in 21 to over $713 million by 2033. It's a CAGR of nearly 6.7%. So growing faster than North America or Europe. What's the story there?
Yeah, in South America, you're seeing a big push for modernization. Internet use is growing, the middle class is expanding, and people want easier access to financial products, including insurance. Brazil is the key player, projected to reach over $305 million. Argentina is also showing strong growth. Both are posting KDRs over 6.5%. You see similar trends in Colombia, Peru, Chile. It points to rising demand for digital, transparent insurance services across the continent.
And the Middle East, also seeing good momentum, right? Revenues projected more than double there as well, around $232 million up to nearly $500 billion by 2033. CAGR is about 6.55%.
Yeah, and what's notable there are the high growth countries, Saudi Arabia, Turkey, and the UAE. Each of those surpassed a 6.9% CAGR. The UAE actually leads that pack at over 7.1%. That likely reflects, strong government initiatives towards digital economies, diversifying away from oil. Financial services like insurance tech fit right into that. They tend to adopt new tech quite quickly in that region.
Okay, and finally, Africa, showing steady growth, maybe not as explosive, but still significant. Projected to go from about $174 million to over $370 million by 2033. That's a CAGR of around 5.75%.
Right. Africa represents, I think, a huge long-term potential. You've got growing smartphone use, a very young population that's comfortable with digital tech. It's starting from a smaller base, obviously, but countries like South Africa and Nigeria are key drivers. It shows a broad embrace of digital insurance, maybe just a bit more gradual, and often the focus there has to be on mobile-first solutions, just given the infrastructure context. So yeah, if we kind of tie all this together, connect it back to the bigger picture, it's just crystal clear, isn't it? The life insurance and annuity software market is on the sustained, really robust growth path everywhere. This isn't just some temporary trend, it's driven by really fundamental things. Digital adoption is just happening by insurers and by us, the customers. There's the increasing complexity of regulations they have to meet in all these different markets. And while customers like us are demanding more personalized options, more efficient service, easier ways to manage policies online, the data from cognitive market research really paints a clear picture of this huge shift.
Yeah, it's striking. By 2033, over $13.4 billion. It really cements this software as like a vital backbone for the whole insurance tech world. So what does this all mean for you listening right now? How might this huge digital expansion change how you interact with insurance in the future? From how you even research or buy a policy to managing it, making a claim, what new possibilities or maybe even challenges could pop up for the average person as this tech gets even more woven into our financial lives? Definitely something to think about as this digital future keeps unfolding.
Welcome to the Deep Dive. We're your shortcut for getting right to the core insights from, well, a whole stack of sources. Today, we're diving into something that's quietly transforming a huge industry, the life insurance and annuity software market. Think of it as a look inside the digital shift that's really changing how insurers work and, maybe more importantly, how they interact with you.
It really is more than just, a tech update. It feels like a fundamental rethinking of how insurance even works, top to bottom. This software, it's not just backstage support anymore. It's actively driving customer interactions, boosting efficiency in a big way, and even shaping the products themselves.
Yeah, absolutely. So our goal for you today, pretty straightforward. We want you to walk away really understanding the main forces at play here. You'll get a handle on what's pushing the growth, but also some of the tricky challenges these companies are facing. Okay, so what's really fueling all this change? Let's unpack this a bit. First off, there's this huge growing demand for automating policy tasks and management. Providers are really leaning on software for the core stuff.
Exactly. And that means automating things like
underwriting decisions, managing billing, policy admin from start to finish, and even claims. It's pretty comprehensive. The upside is clear. We're hearing about big drops in processing times, maybe 30–40% for new policies sometimes. That really hits customer acquisition. Plus, fewer manual mistakes, smoother service overall. It helps meet that demand for speed and transparency people expect now. It totally reshapes the whole policy lifecycle.
Right. And then there's the customer side, the growing expectation for like digital first experiences. It's not shocking, really. We expect seamless digital stuff everywhere else, so why not from our insurers? But how does that actually translate into software features? Like, what do insurers need now that maybe they didn't 5 years back?
That's a great point. It's way beyond just having a basic website now.
Yeah.
This expectation is pushing innovation hard. We're talking robust customer portals, proper self-service, really slick mobile apps that just work, and real-time tracking for policies, claims. And this ties directly into the competition getting tougher. Having these advanced platforms, these rich experiences across channels, it's not just nice anymore. It's pretty much essential for keeping users satisfied, engaged, and, crucially, loyal. You've got to keep up with how people want to interact digitally.
Okay. And the third big driver, always a factor in insurance, is regulatory compliance. Constant pressure there.
Oh, absolutely. And the rules are, well, complex. You've got GDPR, HIPAA, plus tons of specific local insurance laws everywhere.
Well,
What's interesting is how software has become just vital for this. These tools manage the documents, the audits, the reporting, all automated and secure. They create that essential audit trail. So it cuts compliance risk, which is huge, but also lets them stay agile. The financial penalties for getting it wrong, massive. So good compliance software isn't just a nice to have, it's potentially saving millions.
But like you said, it's not all straightforward. Growth is strong, sure, but there are definitely some bumps in the road. Let's talk challenges. And maybe the biggest one starting out is just the sheer cost of getting these systems in place and customized.
You hit it right there. The investment is serious. It's not just buying the software license. You've got integration costs, migrating potentially decades of data, which is tricky, and then training everyone. It's a really big hurdle, especially for smaller or mid-sized companies trying to make brand new software work with old, sometimes ancient legacy systems. That's tough. It can feel like, I don't know, trying to rebuild a plane's engine while it's flying.
Yeah, that legacy system problem. That leads right into the next challenge, doesn't it? So many insurers are still running on older IT. What does that actually mean day to day when they try to bring in modern tools?
It's a huge barrier. It's like trying to stream 4K video over an old dial-up connection. It just doesn't compute. Often these old systems are just plain incompatible with the new software. So integrating them becomes this massive, expensive headache. It can eat up so much time and resources, sometimes stalling those big digital transformation plans for, years. And it stops them from using the really cutting-edge features that could actually make a difference. Some are spending fortunes just patching up the old stuff instead of innovating.
Right, keeping the old ship afloat instead of building a new one. And the last challenge we should touch on, something that affects everyone really, is data security and privacy, especially with all the sensitive info involved.
The stakes there are incredibly high. You're handling very personal, very financial data. It's not just about avoiding those big, splashy data breaches you read about. It's also about constantly keeping up with privacy laws like GDPR, CCPA, and others. So insurers are understandably pretty cautious about new tech, particularly cloud stuff. They need absolute proof of rock-solid security because one slip-up, it can destroy their reputation, lose customers overnight, and bring massive fines. Trust is everything in this business.
Okay, so those are the drivers pushing things forward and the main obstacles. Now let's switch gears a bit and look ahead. What are some key trends really shaping the future here? What's the biggest delivery shift you see?
Probably the most significant shift is the huge move towards cloud-based platforms and software as a service, SaaS. What's really fascinating is how fast these are taking hold. The benefits are just too compelling. You get scalability so you can grow easily. Real-time updates happen automatically, and often the upfront costs are way lower. So insurers are really jumping on SaaS models. They deploy faster, they're easier to access, and this is huge because it lets even medium-sized firms modernize without massive hardware investments. It kind of levels the playing field, technology-wise.
Makes sense. Another trend that seems massive is integrating AI, artificial intelligence, and predictive analytics. How is AI actually changing things on the ground, like in specific parts of the business?
Yeah, AI is definitely a game changer here. We're seeing it sharpen up underwriting, for instance. It can analyze way more data much faster than a human. Fraud detection is another big one.
Yeah.
AI spots patterns that are almost impossible to catch manually. Beyond that, these tools help refine pricing, understand customer behavior better to offer the right products, even personalize how they communicate. It just makes the whole operation smarter, faster, more responsive. Some are cutting claims processing time by like 25% using AI.
Wow. Okay. And finally, a trend that directly impacts the policyholder experience, this rise of self-service and omni-channel platforms. People want more control, it seems.
Totally. If we connect to the bigger picture, it's about empowerment and convenience for the customer. Meeting them where they are, people expect to be able to, update their info, pay a bill, check their coverage whenever they want, 24/7 on their phone or computer. So insurers are building these unified digital fronts, web, mobile, chat, even tying into call centers for a consistent experience. This makes customers happier, obviously, but it also frees up staff from handling routine stuff. They can focus on more complex issues. It's about making insurance feel as easy as, say, online banking.
So wrapping this up, what does this all mean for you listening in? It's pretty clear that digital innovation, shifting customer expectations, wanting everything seamless, and that constant pressure from regulators, it's all driving huge fundamental change in this space. The life insurance and annuity software market is definitely an industry adapting on the fly to this new digital world.
Yeah, and maybe a final thought to leave you with. Think about how fast AI and self-service are being adopted, like we just discussed. How might your own interactions with insurance providers change, really fundamentally change in the next, say, 5 years? Will managing your policy become completely automated, almost invisible? Or will that human touch, that expert advice, still be crucial? And if so, for what? It's definitely worth thinking about how this tech wave is reshaping your own relationship with personal finance and insurance. What will that look like for you?